Hello and happy open enrollment. I just want to make this quick video to explain this section. If you're watching this video, you have received this form to fill out so we can do your annual renewal and get you an idea of what your health insurance is going to cost for 2026. So you should have gotten a text message with your account number, your AC number in. I will need your full legal name, not what it is that we call each other, right, but your actual full legal name. If you are changing or you have a different cell phone number, please put it in here. You have a different email, put it in here, right? And then your tax status. Any of these will be helpful. Now we come to this section, and this is important. If you are an employee, this is for the earned income section. If you work for someone who gives you a paycheck and they deduct Social Security and Medicare, you are an employee. If you work for yourself, even though you do give yourself a paycheck, if you're an S corporation or a C corporation, right, then you are self-employed. If you are a sole proprietorship and you just work under your name and you don't pay yourself a paycheck, still self-employed. There are some people that are both. They work for a company and they have a side hustle. Okay? Now we're getting into earned income. I want to show you how to report into this box. This is a client of mine who is now deceased. So he has allowed me beforehand if I could use his account. The way New York State is going to ask me this is for earned income. I'm going to say add an income source. And we're going to say that you work for McDonald's at 111 nowhere, whatever, street. It doesn't matter. Rochester 1465. Now notice the self-employment down here. We're not going to click this. This is working for a W-2 employee. Add in. I can add in any different types of things. I can say you are full-time or part-time. You are working for $20 an hour for 30 hours. You see it does the math because it's looking for gross. If this be the case and you're going to do this, oh, I should have told you, my fault. This is for January 1st, 2026 until December 31st, 2026. So this is an estimated annual income for 2026. Now, I know that it is an estimate. So if we put it in, you say you're going to make $31,200 next year. You work at the end of January and McDonald's fires you. You call me back and we change this, right? And then your health insurance cost changes. This is just what you're estimating for next year. Now, I do also need you to know this. If I were to put this up a little bit higher, let's say $30,000 or $30. If you're making $46,000 a year, you will get a tax credit of, let's say, $800 a month. You get the $800 a month tax credit at year end. If you didn't make 46, but you made 52, that means they gave you more money than you should have had, and they want all of their. They don't want all. They want a portion of their money back. They want, if you would have been 52, they're going to take back the difference between what they would have given you at 52 versus 46. If you underestimate, if you told me you were going to make 46, but you actually only made 42, they tell you to guess better next time. So it's better to underestimate a little bit and know the government's some money than to overestimate and not get any back or not get enough back. Again, that being said, this is your job. This is the easy one. If you already know, I'm going to try and work the same job all next year. We're going to work for $30 an hour for 30 hours a week. That pretty much calculate and we're good to go. You can actually write that in here as $30 an hour for 30 hours a week. And that works just fine. You could say, hey, listen, I'm salary, and I'm going to make $55,000 a year. Right? Any of these will work. I do need you to understand, because there are some people that are listening to this that are going to be retiring. So that is now seasonal past employment. And you say, hey, listen, I'm going to be working as other. You're now working for $30 an hour for 30 hours. And you are going to start in January, and you're going to stop at the end of May. And they will calculate your income, $30 an hour for 30 hours a week from January to May. And this is the income. It's not going to let me start here because I'm not in 2026 yet. But you get the idea. This is for 2026. So if you were going to work only for a few months and then retire, this is where that information goes. Same thing if you were salaried. You say, hey, listen, I make $50,000 a year salary, but I'm only going to work from here to here. It takes $50,000. So unfortunately, you're going to say $50,000 divided out by 12, multiplied times 5 months, right? And then you get the right amount. The calculator doesn't actually do it for you, which it should, but it doesn't. In that case, you can write it in here, $55,000 for the year. And that is your earned income. If you are self-employed, go back to full-time, part-time, and you're going to make $50,000 annually. You can put that in there. That is your wages only. I am self-employed. I pay myself a salary, and at year end, all right, my business makes money that I have to claim as income. So this is only what I pay myself as a salary. Let me go back one more to make this even worse. If I did click self-employment, and I come through, and you say, I don't know how much I'm going to make for next year, then they're going to ask you for gross sales, rents, royalties, inventories, which no one in their right mind wants to fill out. So this, you just go in and say, I assume I'm going to make $50,000 this year of wages. If you're a sole proprietorship, you don't have to do this at all. Okay? And that is just the earned income section. There's no 401k, no IRA, no pension, no under the table work. There's nothing that goes here. This is only if you're getting an employee wage or you're an employer who is self-employed but still paying yourself a wage. I'll add another video for the other sections. Thank you.